Good morning, everybody, from cold New Jersey. It is 8:46 a.m., October 17th, 2023. Thank you all for being here today. As you can see, my voice is even cracking. That's how cold it is. It's pretty cold in New Jersey. That's where I'm located. And as a result of that, we have to put on the scarf because it's kind of cold in New Jersey. Now, granted, I think the scarf is kind of stylish. I think it kind of goes well. Maybe if we do this is a different way of like putting it on. But I was like, you know what, we should put on the scarf today because it is it is actually kind of cold. So we are going to be working with this scarf today. Thank you all for being here. All right, today's going to be a big day. Today's going to be a really, really big day. Why is it big? Earnings season has begun. Goldman Sachs, Bank of America, Lockheed Martin. We've got Johnson & Johnson. We've got a ton of companies reporting, and some of those companies and their earnings reports will make you shiver, which is another reason to wear the scarf. So it's definitely important to look into all these companies. We got the 10-year. We got the oil Brent futures up a little bit, even though they're down from yesterday. On top of that, we've got a lot of other stuff going on because tomorrow we have Netflix and Tesla, so we've got to be able to discuss that. And the 10-year is at 4.87, inching up from 4.56 yesterday because the consumer is continuing to show that retail sales are up 0.7% month of the month. So the consumer is basically like, yeah, we're not going away. We're going to keep buying Lululemon, keep buying Nike, keep buying all these products, keep buying iPhones. And as a result of that, that's actually not the best for inflation. So we've got a lot to discuss, a lot to go on. And today's going to be a big day because earnings season has begun. Marvin, Midwest, Stefan, Imnop, thank you for being here. Markets Investing, Kevin, Ryan Hayes, Victor Hernandez, Kelly. She doesn't like the scarf, it seems like, but the scarf is here. Let's go. Dead Raccoon is back. Joseph, what's up? Buenos dias, Socrates, Garcia, Sethi Roth, Arjun, Mario, greetings from Russia. I love it. I think every Wednesday we're going to do the say what location you're from. Every Wednesday we're going to do that. So today's what, Tuesday? Yeah, every Wednesday we're going to say where you guys are from. It's going to be super cool to see where everyone's from. Daphne, SP Narwhal, Monty, it's 96 degrees right now in Dubai. Bro, that's crazy. Farino, Sweden, Dr. David, thank you all for being here. All right, so let's get into first piece of news that I want to discuss, which is honestly Bank of America earnings. This is a big one, and I want to see what we've got going on here, and I think this is going to be an important one to discuss. So Bank of America. Now, why is this company important? Basically, this company is one of the largest banks in the world. I think it's like the 5th or 6th largest bank in the world. And if they have a crappy earnings, then that's actually not good for the rest of the market, obviously. But their counterparty, JP Morgan, put up a great earnings last week. Book value of 140, net income increased 35% year over year. So Bank of America hopefully does well. Off this headline, not too bad. Bank of America tops profit estimates on better than expected interest income. So here we go. Earnings per share, 90 cents per share versus 82 cents. So that was really good for Bank of America. We beat on 8 cents per share. Revenue, $25.32 billion versus $25.14 billion. So a slight beat there as well. So we beat on earnings and revenue per share, which is great for Bank of America shareholders. Profit rose 10% to $7.8 billion from $7.1 billion or 81 cents a year earlier. That's not bad either. I mean, that's really not bad at the scale that you're operating at Bank of America, especially with interest rates being as high as they are. For you to be able to increase revenue by about 3% and profits by 10%, that's not bad to me. Interest income rose 4% to $14.4 billion, roughly $300 million more than analysts had expected. Remember, when interest rates go up, that's actually good for banks in terms of the net interest income they can get. It's bad in terms of the cost of capital they have to pay for loans. So there's a margin there that starts to get compressed, but Bank of America still was able to benefit on $14.4 billion. Shares of Bank of America rose 1% of the pre-market trading. If we look at Bank of America right now, and let me know in the chat if you own Bank of America, obviously Warren Buffett, very big shareholder, 27.27 up 1.04%. I think we were at 27.09 yesterday. We ended the day at 26.99. So not bad at all. We added clients and accounts across all lines of business. CEO said we did this in a healthy but slowing economy that saw the U.S. consumer still spending ahead of last year, but continuing to slow. And again, the retail numbers came out in the morning. The consumer spent 0.7% month over month more than last month in terms of retail sales. So we are still seeing a very resilient consumer, which is why I have pretty high expectations for Q3 earnings, especially for the tech stocks, because there's probably going to be more people that signed up to Netflix or, using Google because of the fact that the consumer continues to be as strong. Bank of America was more sensitive to the recent surge in 10-year treasury yield than its peers and more similar to some regional banks that are also nursing underwater bonds. Bank of America has more than $100 billion in paper losses. Okay, so I'm glad we got the number. I thought it was like 50 billion, but now it's confirmed 100 billion losses in bonds. So as interest rates go up, that 100 billion of paper losses continues to go up. I think we are done tightening. Now the FOMC, if you do the rating for how likely there is going to be a chance for a rate hike, it's now down to 5%. It was at 30% a week ago, then it went to 11%. Now it's at 5%. So it seems very unlikely we are going to see another rate hike. And if that's the case, these $100 billion in paper losses that are underwater for Bank of America, for other companies, it's tens of billions of dollars. That will inevitably start to turn into not paper losses. They will turn back to normal, but it will take time for those rate cuts to come down. As long as Bank of America and these other regional banks can weather the storm until that happens, that's great, but that will take time. And it will take rate cuts. And it might happen for another 2-3 years, but we can't keep going higher because that's, just going to keep increasing the losses as well. So Bank of America, not bad. Bank of America, really good. That's one domino that fell. That's great that it fell, and it fell in the right way because we got Bank of America down. And if we got Bank of America down, when I mean down, I mean it's out of the way because it's up, then we will probably have some other banks doing well. Garcia says, I talked shit on Bank of America on jury duty and I was disqualified. That's hilarious. My mom just got jury duty yesterday, and she's gonna have to miss work for that. I've never had jury duty yet, so it's gonna be interesting when I get jury duty. But it's funny because you say one bad thing and they think you're biased, and then they expel you, right? So there is a way to get out of it if you're smart about it. What was I gonna say? There is a process called jury nullification. I would suggest people look up. It's actually a right guaranteed to us by the Constitution. And it's I had a debate topic about that in 2015. So jury nullification is a really interesting thing if you ever get picked as a juror. Okay, Goldman Sachs. Let's move on. Let's move on to the Sachs made of gold. Let's talk about David Solomon's company, who's a part-time DJ, for those that don't know. TJ was like, I just never showed up. All right, TJ, that's a federal crime, but he's like, I just never showed up. And let's talk about Goldman Sachs. All right, so company reported earnings of $5.47 a share, topping the $5.31 estimate, which is good. Revenue of $11.82 billion versus $11.19 billion. Now, Goldman Sachs beat on expectations, which is good, but their profit dropped 1/3 to $2.058 billion from a year earlier. So 2022, October this time, they had 33% more in terms of profits. Revenue slipped by 1%. The revenue slip is 1% is here to there. That doesn't matter. Especially because they beat expectations. But that profit drop of 33% is pretty dramatic. And so that, I think, was their biggest thing for them. Bond trading revenue fell 6% from year to $3.38 billion, but that was almost $600 million more than what analysts expected. So again, even though it fell, it was better than what analysts thought. Goldman cited strength in interest rates and products and mortgages, which helped offset declines in trading of currencies, commodities, and credit. Equities trading revenue climbed 8% a year to $2.96 billion. Robinhood does about $800 million in equities trading year over year. Goldman Sachs on a TTM does $8 billion on equities trading. So obviously you can see that, there's a difference between Robinhood and some of the big guys. Investment banking revenue edged higher by 1% to $1.55 billion, slightly exceeding the $1.48 billion estimate. So Goldman's shares were unchanged. They're pretty flat. I think the market is kind of neutral to this. It wasn't bad to the point where the market's like, all right, we're going to sell off the stock. It's actually now green in the pre-market, 0.05%, up 16 cents. But it wasn't some phenomenal report that showed Goldman Sachs has a ton of strength. I think what the market's contrarian opinion is that if it's not bad, it's good. Because in this high interest rate environment with so much geopolitical uncertainty, if you're not bad, if you're surviving, you're good. And obviously, some of these companies are actually thriving, not just surviving. But Goldman Sachs, one of the biggest companies in the world, it's not that easy for them to grow at substantial levels, right? Because they are already so big. So if they can at least survive and beat expectations, which is, not a bad thing. They beat on profit and revenue, even if it's down a little bit year over year, then, you're going to get a company that the market ends up liking. Goldman Sachs is one of those beloved stocks on Wall Street. Obviously, it's integrated into the entire paradigm of our current financial infrastructure, but they had to show the results, and they ended up showing results that weren't that bad. So Goldman Sachs not doing bad at all for today either. You guys are still talking about jury duty. Crossroads says, I legit moved 3 months before being selected twice. Did actually want to serve. Imnop says, last time I got jury duty, I told them I'm a stock trader and would miss out on income, and they dismissed me. That's actually kind of cool, bro. Like, dude, I have to trade every day. Like, I can't do the case of jury duty. Yeah, if I ever get it, I would say, like, I'm self-employed or whatever, and maybe they would let it go. I think my dad said that once, and they also let him go a while ago. All right, so that's Goldman Sachs. Goldman Sachs, not bad at all. Again, great results on Goldman, great results on Bank of America, and Goldman, and also the next one we're looking at, which is Johnson & Johnson. Kelly said, I got jury duty while I was pregnant, and guess that was a reason enough to dismiss me. Yeah, I think they're sensitive to a lot of people that have different things going on. So there are ways to get out of it. But if you've got nothing going for you, then they're like, you better show up and do your jury duty. Okay. Johnson & Johnson is up next. Now, I have a special relation to Johnson & Johnson because I went to Rutgers, New Jersey, for college. And our college is literally like right next to the Johnson & Johnson headquarters. New Brunswick, New Jersey, Johnson & Johnson is like the company everyone goes to work for. It's like the local like car shop when you're in high school and you go to work for them, right? In your neighborhood. Johnson & Johnson is like the local corporation. Like if you basically sucked at getting an internship everywhere else, or you're just like not smart enough to work anywhere, you work at Johnson & Johnson. That's why whenever we're at Rutgers and someone's like, oh, where are you interning? They're like, oh, J&J. It's like, oh, have fun at J&J, right? It's like, it's a boring place, but obviously a very big company, really cool company. They do a bunch of stuff for the community back in Rutgers. I just never wanted to work there because it felt too basic to me. But here were their earnings. So they revised outlook on Tuesday. J&J expects 2023 sales of $83.6 billion to $84 billion compared to a previous guidance of 83.2. So they increased that. They also expect earnings per share of $10.07 to $10.13, up from a previous forecast of $10 to $10.10. Revenue of $21.35 billion versus $21.4. That's a beat. 2.66 EPS versus 2.52. That's a beat. So they beat on earnings per share and revenue. If we look at their stock real quick, let me pull it up. Johnson & Johnson, J&J is the ticker. They are up 0.15% in the pre-market, 157. J&J stock rose nearly 1% in pre-market shares. Shares of J&J have dropped nearly 11% for the year, putting the company's market value at $379 billion. Obviously, a very big company. Pharmaceutical giant reported net income of $4.31 billion, which was flat year over year. So they have not increased their profits, but they also have not decreased their sales or revenue. $13.89 billion in pharmaceutical sales, which grew 5% year over year. Excluding the sale of its unpopular COVID vaccine, the pharmaceutical division raked in $13.85 billion. That vaccine did them some harm because all of the vaccines had side effects, but apparently J&J's was like the worst. Pfizer and Moderna were like limited side effects from what I understood. J&J was like something that just wasn't good. So that J&J vaccine definitely was not good for them, not only for sales, but also just for the brand as well. But look, not a bad quarter for Johnson & Johnson. They did well. They did what they had to do. They did have a they did have a spinoff. I think they separated their company in a bunch of different divisions. It was their biggest shakeup in its 137-year history. I remember that happening back in August. They did have some opioid and asbestos lawsuits a couple of years ago as well that cost them a couple $2 billion. So they've been through a rough couple of years, I would say since 2019. I remember even in Rutgers, we were studying some of their lawsuits they had when we were doing a case study on them in business class. So overall, bad couple of years, but still being able to beat on revenue and earnings is good. The real big thing here is, even if you don't own the stock, is you just want to see companies doing well every single like quarter. And you want to see companies in different sectors, especially if they're the leaders of those sectors, do well. Like if it's some random pharmaceutical company that sucks, it's like, all right, whatever, we don't care. If it's J&J, which is one of the core leading pharmaceutical companies on the planet, you want to see them do well. You don't want to see them do bad, because if they do bad, obviously that's not good, for the rest of the entire market as well. Crossroads again with the jokes that thinks he's so funny. J&J, so you're a C student, eh? Yeah, honestly, I was just like, dude, everyone worked at J&J at Rutgers. I was just like, I do not want to work here. And in Walgreens, J&J is a very big partner as well. So I grew up with them many, many times. Yeah, so J&J was definitely pretty big. These banks doing good makes me excited for SoFi. Yeah, and then look, remember, deposits are down for banks as well. in different sectors. So even though banks are doing well, that could mean that if their deposit decline is down, their deposit growth is declining, then that should be good overall for SoFi writ large. So we're going to see some updates for SoFi. Right now, SoFi in the pre-markets, let's take a little bit of a look at them. 816, down 1%. I actually think they're down 1% because the banks are doing well. When in reality, the bank's doing well doesn't really take away from SoFi, especially because SoFi doesn't need, a ton of deposits from the banks to be able to do as well. Palantir is at $17, down 2% in the pre-market. So we're seeing a little bit of volatility on Palantir. Let's actually do a little bit of update on the charts, and then we'll move on to our guy, Tom Lee, who has some thoughts on what's going on in the markets a little bit more. And we'll see what he has to say. Palantir down 2% in the pre-markets. Guys, yesterday trying to upload the Palantir daily video, you would not believe how much stuff I had to go through. I still got it out by like 8:45, but it was the latest I had ever put out a video. It seems like you guys are liking the format, so we're going to keep going with it. I'm really enjoying the format and just getting it out there once a day. I think it makes things even better. Palantir now down below $17. But like, the computer crashed, the footage crashed. There was a bunch of pauses in the footage. It was like so much stuff I had to fix. And then the uploading took like 3 hours. I'm like, and then the checking when it processed to make sure that it was just a long process yesterday. So hopefully today we don't have that same problem, but that's why I was late. 1696 on Palantir, selling off 2.25%. Yesterday we saw Palantir go to 1680, and then it rebounded all the way back up to 1745, ending at 1736. So we are seeing some price action between that 1680 range and 1730. Either it breaks to the upside and it capitulates and we get beyond that $17 range and we stay above that range, or we break through the $16 range and we see a little bit of a break. And we're going to end up seeing how the market decides to treat the premium that's been given to Palantir. Dan Ives came out yesterday. This is what I talked about in the video. And he said that he believes Palantir will become the eyes and ears of Israel's IDF. Will that happen? No clue. But, if that does happen, that is going to be some increased revenue growth. This is not Ukraine. Israel actually has money to pay for this type of stuff. I think Palantir would give it to them for free anyway, but eventually it would, they would monetize somehow. Ukraine really just doesn't have the resources to pay for any of this stuff. So we would see what that looks like from a monetary perspective. But again, if earnings doesn't really show increased growth from the Israel kind of premium we're getting in terms of defense, I don't know if that means that Palantir is going to do as well in terms of share price, because the revenue growth is just not going to be there. So we really have to see how the market interprets it later in terms of what's going on with the price action. Sachin, thank you for being here. Thank you for joining the morning open. Unity is back in the buy range. We'll check on Palantir back in a little bit. Let's go back to Unity. Unity, where is it at? Where is your buy range? $27.99. Yeah, I mean, look, 25 to 29 was when we started talking about it a couple months ago. I don't think that's a horrible buy range for Unity either. The potential on Unity is really interesting. $10 billion market cap, one of two basically monopolies that ends up making the hardware and software for video games to be able to be effective in the new AI world that we have. I don't know as much about Unity as other people. I do know what they did over the past couple of weeks has been horrible for developers. It seems like that's been reversed. The CEO is gone. They have an interim CEO. They're going to have new leadership, new management, and they probably needed new leadership and management based on looking at the history of the old CEO. But this is a very interesting company. I think if you're bullish on gaming, bullish on Roblox, bullish on Fortnite, bullish on like the metaverse, Unity is kind of the back-end infrastructure that powers a lot of that stuff. If you're also bullish on VR, the Vision Pro, they have a partnership with Apple. So I don't own the stock yet. I don't know enough about it to care to own it for the next 5-10 years. But, Unity is one of those stocks that's pretty interesting to a lot of people. Apple at 177. Apple sales are apparently down 5% year over year in China, which is why Tim Cook is traveling to Shanghai, I believe. That news broke today. Yeah, look at this. Apple CEO Tim Cook makes a surprise visit to China as iPhone 15 gets off to a challenging start. Let's actually get into this while we're talking about Apple. Let's do a couple more stocks and then we'll do the Apple news. S&P 500, 433 pre-markets. Lululemon just joined the S&P 500, 414. Amazon is down pre-market. Google's down in the pre-market just a little bit. PayPal, of course, is down in the pre-market, 56.55. Robinhood just getting beat up after that regulatory fine that might affect our GAAP profitability. So 921 in the pre-markets for Robinhood, but Bitcoin doing well is actually good for Robinhood. Now, apparently what I reported yesterday, I'm sorry to have reported fake news. I did feel like fake news after this was corrected to me. We did not get a spot Bitcoin ETF approval on Bitcoin. That was fake news. So because there was no spot approval, it went, you see that big line going down. It went from 29.95 right down to 28.230. So, I mean, Bitcoin didn't really have the it went up really, it was almost at 30,000, then it came back down. So all the Bitcoin miners, Coinbase, Riot, Marathon, all of them also went down as well. So, maybe that spot ETF will be approved eventually, which I think it will, but it did not get approved yesterday. And so Bitcoin came down. Uber is down. Netflix is down. Tesla's down. Pfizer's down. Lockheed Martin is down 1%. We're going to talk about their earnings in a little bit as well. Their sales are flat 2% year over year. So even though they got a 9% premium last week because of what's going on with Israel, the market's punishing them by 1% today because their premium or their results just were not as good. TFC reports tomorrow. That's going to be a big earnings for us, 28.87. Big earnings for me. I have a substantial position in my portfolio. I'm hoping that the cost cutting is going to be enough for the market to realize that TFC is ridiculously undervalued. But I think it's going to take 6 to 8 months for the market to really start seeing what's going on with TFC, and it revolves around rate cuts. So we'll see what goes on from there. And again, Palantir down to 16.97, below 17 in the pre-markets. All right, let's go to Apple and let's get an update on what's going on there. Tesla earnings are tomorrow. And Netflix is tomorrow. So we'll do Tesla and Netflix tomorrow. That's going to be interesting. Tesla and Netflix, they usually report together always. So that'll be a fun day. After hours, we'll be here. I think I'll try to get Carlos to be here with me and we'll report there. All right. So Apple CEO Tim Cook makes a surprise visit to China as iPhone 15 gets off to a challenging start. So Tim Cook cheered on gamers at an event during a surprise visit to China, underscoring the market's importance of the iPhone giant at a time when it's facing mounting challenges. Their third largest market has shown sales are down 4.5% year over year with the iPhone 14 in the first 17 days. Now, I believe sales are up almost 12% year over year in the United States for the iPhone 15. Which is what I heard yesterday. But the poor consumer sentiment, which is challenging all throughout China, is making the iPhone 15 performance worse than in the United States. The interesting thing here, though, there's two ways to look at it, right? Either a lot of people bought the iPhone 14 and they don't see the need to upgrade, which is totally reasonable. And I think Apple, if they say that on the earnings call, they can get away with it. They can be like, look, the phone was too good last time, so people didn't upgrade, but you shouldn't hurt us for that because people are still using the phone, which means we can still charge on services, but it's hard to get them to buy a new phone. Or the bearish case that I think they're going to be asked about in earnings is, well, so you say you say people haven't upgraded in 4 or 5 years, right? People are still using the 12, the 13. Why aren't they upgrading to the 15? And that might be the situation going on in China. It's either people have the 12 or 13 and they haven't upgraded because they don't see the need to, or they just got the 14 and it's too good, so they don't see the need to. So either way, it's hard to justify the upgrade. Recently, as Monday, Jefferies published a report saying that Huawei has become the number one smartphone maker in China, overtaking Apple. And this Huawei has released what is basically their iPhone 12 Pro Max, but they marketed it really well. And so they were able to get it to be more exciting in China. I think that report that government officials weren't able to buy the iPhone as well was kind of proved to be false as well. If it's not proved to be false, Apple can say that's another reason for why their sales were down, but then that brings up the massive China risk they're going through. So either way, Apple's struggling pretty big, trying to justify that this makes a lot of sense. Amid NVIDIA's down in the pre-market, are you covering NVIDIA? Well, let's take a look at NVIDIA right now. We'll see if there's any news on NVIDIA. But that was the update on Apple. Sales down in China, and as a result, stock is down as well. Again, when you're almost a $3 trillion company, it's just hard to grow. It's just really, really hard to continue growing. Okay, NVIDIA. What's going on with NVIDIA? So we are down 3% in NVIDIA. I'm going to do a good old Google search on what's going on with NVIDIA. And let's see if anything's here. Here we go. We got the news. So NVIDIA's falling pretty dramatically to 445. Again, 3% on NVIDIA is tough. Here is why NVIDIA is down. The U.S. has banned exports of more AI chips, including the NVIDIA H800 to China. That'll do it. So we kind of knew this was coming. The U.S. Department of Commerce announced Tuesday that it plans to curb the sale of more advanced artificial intelligence chips to China. The new export restrictions will restrict the export of the A800 and H800. Those are their core chips. Senior administration officials said the restrictions could also affect chips sold by Intel and AMD. Oh, so I would imagine the other guys are down too, right? Let me look at INTC. Is that down? Yep, Intel's down 1.7%. That's a lot for Intel. AMD is down 1.94%. So all the semis are down right now. Other rules will likely hamper the sale and exports to China of semiconductor manufacturing. Interesting. So in terms of geopolitical security, this is probably the right move from the United States. The problem is it's not the best for NVIDIA. The earlier restrictions banned the sale of the NVIDIA H100, which is the processor of choice for AI firms in the US, such as OpenAI. Instead, Chinese companies were able to buy a slightly slowed down version of the H800 or A800 that complied with the US restrictions, primarily by slowing down and device connection speed called an interconnect. These restrictions could also affect Intel and AMD. Yep, there you go. I don't know. I think the market is not going to care that much about this. I feel like, yeah, SMCI, I was just about to check. I feel like the market would recover from this because we kind of knew this was coming. It's hard to imagine that they didn't price this risk in, but I guess I'm wrong. They didn't price this risk in. TSMC, let's look at them. These guys are also down on the day. Why isn't the M typing? TSM. Okay, there we go. TSM down 0.93%, and then SMCI. This was the one we found at $70. This is down 3% now at 282. Yeah, the entire market's red. It's so weird. Everything in the pre-market is red, and it's weird because it's like earnings have been pretty good for Bank of America, Goldman Sachs, and Johnson & Johnson. So I don't know why we're this red in the pre-market, but we are red. Let's get an update from Tom Lee, and let's see what he has to say. I got to get this guy on the show. He asked me to message his folks. I messaged his folks. They didn't get back to me, but we're going to see if we can get Tom Lee on the show soon. Here we go. Tom Lee, here's what he has to say about markets and some of the uncertainty we're seeing.
Shaping up. We just mentioned all the different things in the mix. The Fed speakers, are those potential market movers?
Absolutely. Markets are dealing with a lot of uncertainty right now because we're in the midst of earnings, which hopefully is better than expected. We've got a geopolitical situation that's uncertain, and interest rates have been creeping up again. So I think markets remain on edge, and I think investors are not that committed. I still think the bias is to the upside, though, because of positioning. Investors really position cleared over the last 10 weeks.
All right, Tom, in all fairness, you are one of the biggest bulls on the street. So I think you're generally pretty bullish about the market's direction. With that bullishness in mind, what is your WEX word of the day?
So the WEX word of the day is uncertainty.
But why?
Well, it's just, I think investors generally like a narrative that's really clear. And right now there's a lot of multiple narratives in place. But I think that the prevailing story is going to be that this uncertainty clears stocks because investors are sort of not invested, and we're in a seasonally strong period. We're going to rise through the end of the month and into the end of the year as well.
All right, so with this uncertainty in mind, I know you're also looking ahead to retail sales out at 8:30 a.m. Eastern. We're also coming off a day where the XRT retail ETF had its best day since June. What are you expecting from retail sales? And is this report, are we going to add this to the list of market movers?
Yeah, I mean, markets are data dependent, so they're going to look at retail sales. I think kind of on the seat's edge because you do have a lot of headwinds there. We know delinquencies are up, and we know consumers have student loan repayment resumptions, and generally the employment market has softened on the edge. So if it's a good report, that would be good news. But as you know, futures overnight are a little soft, and I think investors are just waiting to see.
Wait, so Tom, I want to be clear. So this is a situation where, so-called good news is actually good news. You're not worried that strong retail sales may make the Fed more likely to come out hawkish, or Fed speakers today more likely to come out hawkish? Is this a data point that you think moves the Fed towards a more hawkish turn?
Well, I think the Fed's speak in the last couple of weeks has made clear that they think the rise in long-term rates is doing a lot of the work for the Fed. So they're in the mode that the bar is pretty high for them to actually increase rates again. I think good retail sales would actually be good news because it would show that the economy isn't stalling and headed for a hard landing, but it's sort of supporting that soft landing scenario.
Okay. We are in earnings season. I want to get to one of your picks right now. Not reporting earnings this week, but earnings are certainly coming up, I believe, a week from today. It's Cadence Design System. Give us a sense. Why is that a smart pick right now? As you just mentioned, we are in a higher for longer environment.
Well, Cadence is one of the most important companies in terms of helping design high-end chips. They do EDA and systems integration. In this world where there's almost continuous demand for AI and shortages of chips, they're one of the key players in terms of designing software, and it's one of the least known. So to us, this is a steady grower with multiples that can expand and very good earnings visibility. I think it's the kind of stock you want to own, especially if you're expecting a year-end rally. And again, it's one of our super granny shots as well.
All right, really quick, I have to ask everybody about this because just higher for longer. Look at the valuation on Cadence, 46 times forward earnings, even higher than NVIDIA.
Okay, Cadence I actually don't know about. We'll probably research them if Tom's excited about it. They kind of look like an SMCI to me in terms of a company that designs chips. But here's what Tom's talking about right here. This is the report that he said it would be good if retail sales were a little bit higher. Jeremy, I see you in the chat. Good morning. Thank you for being here. Retail sales rose 0.7% in September, much stronger than the estimate. So consumers showed surprising strength in September, boosting retail sales well above expectations despite higher interest rates. And we saw this yesterday when I saw Lululemon was joining the S&P 500, and I saw that they're selling hoodies for $130. There's no way you increase your sales unless people there's no way you get into the S&P 500 and have a market cap to be qualified unless people, you show the numbers. To show the numbers, people have to buy your product. If people are buying your product, that means you're actually getting away with selling a $130 hoodie, right? So we are seeing that the consumer is strong. This is not 2022 where Lululemon could not get away with selling a $130 hoodie because just people were not willing to buy that. Retail sales rose 0.7% month over month, well above the 0.3% Dow expectation. According to the Commerce Department, excluding autos, sales were up 0.6%, also well ahead of the forecast for just 0.2%. Now, the tricky thing for the Fed is their argument is well, we don't want that much money going into the economy. And if we don't want that much money going into the economy, it's really difficult for us to imagine that, inflation is going to be coming down because it seems like people have enough money from their jobs. People are willy-nilly spending it. People are not afraid of inflation. And, inflation is not sort of high enough to kind of get them to be scared, which means inflation has to get higher. The counter argument that Tom Lee was making is that because rates have been so high and the economy has significantly slowed down in terms of potential earnings growth and just overall company sales, year-over-year estimates, then the consumer being strong is actually the most healthiest thing because you don't want a ridiculously slowed down economy if the consumer slows down as well, because then something's going to break. And then when you lower interest rates, it's not going to be for a soft landing. It's going to be because obviously something has broken the economy. We will see in the next couple months which narrative ends up playing out. But this consumer is strong. And that's why I think Q3 earnings are going to be good. Again, this is another piece of data that supports the end of year rally. Like this whole Santa Claus is coming to town. If the retail spending 0.7% more than we expected month over month in September, it doesn't seem like in October that's necessarily slowing down, especially with holiday season coming up. You got Halloween costumes, you got turkeys to buy, you got Christmas gifts. Like there's a lot of spending that's coming up over the next couple of months. 10-year Treasury up at 4.82%. I think it kind of jumped on this consumer report as well. 10-year is likely going to go up if they think inflation is going to go higher. Inflation is going to go higher if they think the consumer continues to spend. So we're seeing a little bit of a jump in the U.S. 10-year Treasury. And if we look at gas prices today, this one is a little bit better from yesterday at $90. I think it was closer to like $90 and like 80 cents yesterday. Over the past days, up 3%. It's not going to be good if we're stuck in 90 for all of October. We've got to see this start to come down a little bit. Over the past month, we've made some changes. But over the past day, we're up. And as you can see, that 90 just went to 89.59. So we're stuck around that $89, $90 range when it comes to gas. Samuel, good morning. Thank you all for being here. So, we will see where this ends up going. But we are seeing the 10-year getting up there. 10-year has to catch up with the 3-month. That is also true. And we might see that happen as well. Laura Nicole says, I saw your comment on tax loss harvesting. I'm going to trim in December, and I'm definitely not going to sell any Palantir. If the market keeps going down, then I'll have more options on what to sell. That's another thing that may happen to the end of the year, right? A lot of people may be up significantly on their positions, and as a result of that, they're like, you know what? I'm just going to cut my losses and keep what I have, or maybe take some profits. So we might see some of that. If the rally ends up being here's my thing. If the rally ends up being big towards the end of the year, I think people are selling, and I think they're not taking a chance on 2024. I know for me, I will definitely be selling some positions outside of Palantir. That one, again, that's just a long-term hold. But there's if my SoFi runs, I'm taking a little bit off the table because I don't know if I trust 2024. Now, there's a lot of reasons for why 2024 is worth trusting, and we can go into all of that. But I just feel like if interest rates come down, it might not be because the Fed is in a soft landing. It might be because something breaks. And I think it's kind of 50-50 on those scenarios. So I don't know. Like 2024, it's going to be a very tough year. And I think some people may end up selling a ton of stuff just if they're up versus if they're down. Definitely not all of your position, right? I'm sure, you want to leave some on the table. But I would imagine if people are up pretty big, they had a SoFi average at 4 and it runs up to 10 or 11. Like there's going to be people that want to secure that before 2024 comes in, especially if 2024 is going to be a bit more complicated than what we expect. And that's my thing. I think 2024 is going to be a bit more complicated than we all think. Like it's just not going to be that fun year. But the end of year, I think Tom Lee also agrees with this. And, he hasn't given any predictions on 2024, but end of year, he says we're going to be fine. And then based on what happens when we get to the end of the year, he'll tell us, if it's going to be pretty messy going into 2024. 2024 is far a good for SoFi year. Yeah, I mean, look, we'll see. We will end up seeing. The other thing is it's an election year, right? And here's the thing I think people aren't thinking about as we go through some of these charts. We got about 9 minutes to the pre-market. Not only is it an election year, which is another reason to go back against my thesis that maybe 2024 isn't that scary, because on an election year, it tends to do well. And, stocks might just end up going up. Now that we have a war breaking out in the Middle East, which, by the way, is going to be a very long war, the Israel defense minister yesterday told Secretary of State Antony Blinken, this war is not going to end anytime soon. He basically said to expect a multi-year war, unless Israel is just phenomenal and it gets rid of, Hamas that quick. It's going to be a while. We stayed in Iraq for 11 years. Who knows if this is 11 years, but this is going to be a while. And I think that's another reason Egypt doesn't want to open their borders, because if they don't know how long the war is going to last, I don't know if they want to keep millions of people inside of their country, with no indefinite end. Granted, I think that's a horrible reason to not open the borders, but I think that might be their logic. If we're having this war, what happens during war is the country tends to come together. And so if Biden ends up becoming a wartime president, just like Trump was kind of a wartime president with COVID, right? It was a national event that brought the country together, and he barely lost against Biden, right? That tends to unify people. And if Joe Biden can show some level of leadership that is reasonable enough to get us through this hard time with Israel and Ukraine, maybe that's his bump in the polls that he wasn't going to get if we didn't have an event like this. That tends to happen, when you have a unifying event. I mean, this is why George Bush was elected again, even though under his watch we had, one of the most horrific attacks ever in terms of 9/11. When one president sends the country into war, there's a particular nationalistic rhetoric that permeates the entire nation that wants you to get behind that president again. And so that may be Joe Biden's campaign, that he is a wartime president, and that's how he's getting the world together. And I think in the context of the market, that also potentially allows the market to be kind of steadfast and have stability in terms of who the next candidate or who the next president is going to be. Now, the opposite side to that is that he gets blamed for the fact that Ukraine's in a war and Israel's in a war, and, Trump gets elected. I think at this point it's Trump and Biden. There's no, Vivek, I like the guy, but I don't think it's going to be Trump and Biden. And so it's going to be a repeat of 2020. We're just going to ends up seeing who wins. Tesla at 250 down 1.35% of the pre-markets. Netflix at 362. We got Truist at 29 or 28.82 down a little bit. Instacart, good old Instacart at $25, down $6 below that IPO price. SoFi at 813. Enphase at 125. Enphase actually doing pretty well, down the mid 120s. Arc Innovation 3804. Oh, we got our girl Cathie. We got to take a look at our girl Cathie. We got to see what she had to say. What about Kanye? Yeah, what about Kanye? Coming out with an album soon, and everyone's so excited for the album. And I'm like, do you guys not remember the shit he was saying in October? Like, all the music fans are just like, we don't really care, that he said he likes Hitler and all this. So we just want the new music. I was like, all right, man. I guess people have a short memory. They don't care. Let's listen to Cathie a little bit. She went on CNBC yesterday. We got 5 minutes until the market open. Let's see what she has to say actually on Bitcoin. Let's give her some airtime on beautiful Bitcoin. I hope you guys enjoyed the Finance Junkies debate we had on Bitcoin yesterday. I had to poke Carlos a little bit on that debate. All right, here we go.
The ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani. On Friday, the SEC chose not to appeal an important case on a spot Bitcoin ETF, making that long-awaited ETF much more likely. Joining us now, someone who very much has a dog in that fight, ARK Invest CEO Cathie Wood. Also joining us, Tom Lydon, Vice Chairman of VettaFi. Cathie, you're one of the 9 applicants for a spot Bitcoin ETF. It does look like the SEC may be forced to approve a spot Bitcoin ETF. Can you tell us what, if any, communications you've had with the SEC and what else we might know about this? How do we push the ball forward here?
Well, actually, our partner, 21 Shares in Europe, did answer or send in information in response to SEC questions. And we sent them in on Thursday, I think, or it was publicized that we did. So what we see here is a little bit of a change in the SEC's behavior. They actually are asking questions, and we provided 5 pages along with our partner of answers to those questions. So progress, we would say, yes.
Yeah, one thing I noticed, Cathie, is that the interest in Ether futures ETFs, which only started a couple of weeks ago, and we had some of the people on from ProShares involved in that, it's been rather muted since they were introduced a couple of weeks ago. I'm wondering if a spot Bitcoin ETF is really going to move the needle this time. It's interesting because Bitcoin's been sideways for months, and yet we've known that this ruling came in, and it's known that they likely may not appeal, and yet doesn't seem to be moving Bitcoin. It's up a little bit today. Is interest a little more muted in Bitcoin than it used to be?
Judging by the questions we're getting.
Remember, Cathie thinks 1 million a coin is happening 2030.
No, I think many people focus on our price target for Bitcoin, and our base case is over $600,000 by the year 2030, and they really want.
Bruh, 630K by the year 2030. It's just, I don't know, bro. If I'm wrong on this, I'm wrong, but that's a lot.
Want to understand that. So maybe they're just trying to understand our research, but there's definitely a focus on, is this a new asset class that I should investigate? And I would say institutions, especially when they see the SEC seal of approval in this way, I think this will finally bring institutional interest into Bitcoin.
Again, some of these numbers, the reason Cathie has lost credibility for me, and I don't mean to dunk on her or anything. Obviously, I respect her a lot. She's a lot smarter than me. She manages tons of billions of dollars more than me. Is that Ticker Symbol U did a really good video on her the other day, and I think it was unbiased because he owns a lot of ARK. He's down like a couple $100,000 in it. She promised a 50% CAGR over the past 5 years in 2021. She has changed that to a 15% CAGR. So if ARK 15% CAGRs, which is even questionable now, the ETF will be $85 a share by 2028, which is lower than the price people bought in at, not even at the high, at like 40% below from the high in the hundreds, right? So it's tough to imagine now taking her seriously when she says, and look, credibility is everything, right? Like when you're in the investment space, the reason we trust Warren Buffett, he's had his fair share of mistakes, but when he buys a stock, we think like this guy really thinks before he buys it. When Cathie says something now, I'm like, well, you just slashed your estimates in terms of returns on your ETF by half, and now you want me to believe that Bitcoin will be $600,000 a coin. Maybe. I just feel a lot of the Bitcoin people, as they have a big argument, but the application of it is not at that level. Even if the institutions get involved, do we really think it's going to get to that big of a price? Maybe it does. But Bitcoin performs like a growth stock. It went down with interest rates. It went down when inflation was high. It was not a hedge. It was not the antithesis of it. It performs like a Tesla, right? Like a Palantir, like a Google, like a not like a PayPal, because PayPal can't grow, but like a NVIDIA, right? I haven't seen it perform contrary to that. So maybe it does. Maybe it actually does break out over the long term, but maybe it doesn't. And we'll see where it goes from there. All right. October 17th, 2023. It's cold in New Jersey. That's why I've got my scarf on. We got 10 seconds until the market open. Thank you all for being here. We're going to see today. We got some more earnings to get through, but after these results that we got this morning, let's see where the market decides to take it. Here we go. Thank you all for being here, ladies and gentlemen. The stock market is now open. Wake your ass up. Here we go. It's time to get in to what's going on in the markets. As we can see, SMCI down 3.66% as we start. Look at the left-hand side of my screen. It's blood. It's pure blood. NVIDIA is down 5%, 4.5%. The reason it's down is because the U.S. has banned more chips, including the elusive H100 processor, to China, which means NVIDIA is not going to be able to sell into China for those chips, which is going to hurt their revenue and growth expectations. NVIDIA down 5% on the day. NVIDIA was at 412 last week when the S&P was at 419, so it has recovered to the 440s. It was at 460 yesterday, but now it is down $20 in a day. Intel is down on that same news, down 1.3%. AMD down 3.2% on that same news. Taiwan Semiconductors down 1.84% on that same news. So that one headline has crashed the semiconductor stocks. Apple down 176 for slowing iPhone 15 sales in China, down 5% year over year. Tim Cook got his ass to Shanghai and is trying to recover the sales, but I don't know if that's going to be able to do anything. Lululemon 414, S&P 500 433, down 0.66% for the day. Palantir 1710, not bad. We were at 1690 in the pre-market, so 1714, not bad. It's showing some strong strength at $17 and maybe capitulating to form a bottom there. Amazon below 130 at 129. Google 139, 139.84, down 0.46%. PayPal 57.04, just turned green, up 0.05%, basically flat for the day, but $57. CleanSpark is down 2% on the day. Bitcoin miner Robinhood 932, actually up from the pre-market at 920, down 0.05%. Marathon and Riot also down 2% and 1.6% respectively, off the Bitcoin spot ETF not being approved. Yesterday, I said some fake news saying that it was approved. Apparently, it was not. Coinbase flat at 75. Bitcoin 28,252, down 0.96%. Obviously down from basically 30,000 yesterday, 29,915. Uber is down. Netflix is down. Tesla's down. Pfizer's down. Slowing COVID sales for Pfizer. We expected that. We saw that yesterday. Raytheon is down. Lockheed Martin is down. Walgreens is up. So the green wall is up, but everything else is down. Square 44.60, it's stuck. Truist down a little bit, 28.90, not as bad as it was in the pre-markets, but 28.90 right now. Bank of America, if you missed it, they had great earnings, beat profit, beat revenue expectations. They're holding $100 billion of losses on their bond portfolio. So as interest rates come down, that will not turn into those losses. But as of now, those $100 billion of losses is not enough to destroy Bank of America. Profit expectations and revenue has been pretty good. Kelly says, all I hear is an auctioneer when the mid does this every morning. What else do we have? Delta 34.37 is down. Shopify 52.76 is down a little bit. SoFi 8.17 down 1%. Enphase 125 down 1.34%. Why is everything so red? Why are we so like what happened today? That is it just like a day that like was yesterday too green? Because there was no macro report that came out that was like U.S. retail sales are up 0.7% month over month. I don't know if that's a reason to tank the market. Like I get the inflation narrative there, but I don't know if that's a reason to take all stocks down. Snowflake's down 159. Verizon's a little green. We did a 15-minute deep dive on Verizon yesterday on Finance Junkie, so you guys can check that out. Chris is pretty bullish on the dividend, which is now 8.5%. For that dividend to get to about 4.6%, which would be the normal dividend that was at for the past 10 years. Verizon has to get to like $50. So there is some capital appreciation there along with pretty, nice dividend at 8.49%. They do have some debt, but that debt is low interest. So there, we talked about it a lot on Finance Junkies yesterday. Microsoft at 329. Snapchat, we should talk about this one. This guy's up at 965. It rose 10% yesterday. Apparently a leaked memo from Evan Spiegel, the CEO of Snapchat, who's married to Miranda Kerr, by the way, for those that don't know, put out a report that says they're going to have 475 million DAUs in 2024, which is up from 447 million DAUs. So user expectation, which means monthly active users, I think they expected at 750 million. That might go to like 800 million, which is not bad for Snapchat. I mean, to have almost 500 million people using your product every single day is pretty phenomenal, quite frankly. So that means there's going to be increased revenue growth on the advertising side, and that's why the market gave it a little bit of a premium. Snapchat stock still decimated since COVID, but we're still seeing Snapchat get a little bit of recovery from higher. Instability in the Middle East, that's why you guys think stocks are going down? I mean, yeah, that's definitely a reason. 10-year sell-off, yeah, the 10-year inching higher to 4.836, so we are seeing a sell-off there. Oh, I forgot to mention this. Yeah, thank you for this, Abraham. Biden is on his way to Israel. Yeah, that is happening. That might also be a reason that's making the stock market a little iffy, because Biden being on his way to Israel basically signals like a show of strength in standing with Israel, obviously. But it's also like, well, why are you going there? Are you a little afraid that there's something else that's going to break out, and we want to make sure that that doesn't break out? Biden is on a Air Force One today. He's probably there right now on his way to Israel. So market red because the 10-year spiking. Yeah, that's actually the best reason, quite frankly. So yeah, I forgot. I mean, Biden going to Israel, it's weird because the Secretary of State, Anthony Blinken, that's such an interesting last name, right? Blinken. I wonder if the guy's like eyes are stable, but that guy's been in Israel and Qatar for like the past week. So the U.S. kind of like sent the people we needed to send to do the job, but now Biden's also going. So it's kind of like, it's like we're really doubling down on this support with Israel. And as a result of that, obviously the market's probably reacting to what may be going on from there. Let me look at the Nasdaq. I didn't get to look at the Nasdaq. Let's see that. Nasdaq. So S&P is down 0.45%. Yeah, Nasdaq down 1% on the day, 13,414. We're seeing some volatility on these indices, and I think the 10-year obviously being at the highest range that it's been in the past week. That's why we're seeing that go a little bit harder as well. Yeah, that's what we're seeing right now in terms of the red. I'm happy Kelly got my joke. Some people got my joke. Let's get an update on what's going on with Israel and Gaza right now, and actually see if there's any plan going forward to what we can do to resolve some of this. I've been glued to the news on this subject. I've been so stuck on this. I've just been trying to learn as much as I can about this, but this is definitely developing.
Overnight, Israel said that it destroyed more than 200 targets in Gaza. That comes as President Biden announced that he will travel to Israel tomorrow. Meanwhile, thousands of people had gathered at the Rafah border crossing with Egypt as diplomatic efforts continue to open it before Israel starts its expected ground operation. NBC's Megan Fitzgerald joins us now with more on what's happening there on the ground. Megan, what can you tell us?
Well, Becky, good morning. What we know is that one of Secretary of State Antony Blinken's biggest priority is the opening of the Rafah border crossing, which is in southern Gaza and northern Egypt, for the safe passage of some 500 to 600 Palestinian Americans who want to cross into Egypt to be able to safely do so, and also to get humanitarian aid across the border and to the Gazans who desperately need it. Now, look, we know that he had this more than 6-hour conversation in Israel with Prime Minister Benjamin Netanyahu yesterday, along with members of his war cabinet. Among the things that they discussed was the opening of that border. And according to the secretary, he says that the Israelis have agreed to develop a plan that would allow for humanitarian aid to get into the needed Gazans, along with the safe passage of foreign nationals, which includes Americans, to be able to cross safely over. Now, look, we know that there are loads and loads of humanitarian supplies that are waiting not far from the border to try and get in. I mean, we're talking over 150 truckloads of life-saving supplies to get in there. And it really is a race against time. The situation on the ground in Gaza gets dire and dire by the day, with more than 2 million people running out of food, running out of electricity, needed supplies like water. We know that according to our producers on the ground, people are already being forced to consume dirty and contaminated drinking water. We know
that is absolutely insane. That is absolutely insane. For anyone who wants a broader update on what's going on with Israel and Gaza, and obviously, we're seeing some more US aid go down there to try to help people that are crossing that Rafah border. I would recommend that Lex Friedman podcast. So Lex Friedman dropped a podcast a week ago with Jared Kushner. I think most people had a pretty unpopular opinion of Jared Kushner because basically you had the president, Donald Trump, take his son-in-law and tell him to become in charge of foreign policy. And just as a nutshell, that seems corrupt, right? That your son-in-law is managing foreign policy. But that 4-hour podcast, I mean, I listened to most of it while I was in the gym last weekend. Like, it totally changed my perspective on Jared Kushner. That guy is one of the most intelligent people I have ever heard in my life. And some of the scenarios he's describing in terms of creating peace with the Saudis. Basically, the Obama administration said the Saudis were crazy and they would never have peace. Jared Kushner went into the situation with eyes, with virgin eyes in terms of just like, let's see what happens, right? Let's just give it a chance. And he ended up creating a ton of peace with the Saudis. And so he didn't have the same sort of biases that legacy administrations had. And he was an outsider to geopolitical foreign policy. So he just went in and he ended up getting some great deals done. So it explains the Israel-Palestine situation decently well. I also think you should look at other perspectives. Jared Kushner is obviously Jewish, so he has his own biases. But nonetheless, it was a great understanding of history. But what we're seeing going on right now at the border, it is pretty tough. And again, I said this yesterday, and then after this, we'll move on to some Palantir news. If you watch the POV videos that Hamas has put out on how they executed these attacks, it's just insane. So a couple of days ago, I watched the Hamas attacks, the POV videos they put out, like the full videos, like how they actually did the attacks. And I watched them at like, I think 11 p.m. I went to sleep at 12. I had a dream that like I was in the situation that there were terrorists in the house. And I woke up from that dream at like 4 a.m. and I was just that dream was so scary to me. And obviously the reason I had that dream is because, when you tend to watch something before you sleep, sometimes it can get into your conscious and you end up I had a full dream about it. And I was like, I can't imagine in real life if someone came into my house and they started shooting up the place and you're hiding under your bed. I mean, just imagining that's it. And this is the thing about those terrorist attacks. It's the type of cruelty by which they were imposed. 9/11, you couldn't believe that someone could take a plane and throw it into a building, right? Like it didn't make sense. It was just like, how is this possible? And now what you're seeing with these Hamas videos is it doesn't make sense how you can just come into a house and just shoot at everybody and just like have no disregard for their life. And so it was pretty traumatizing. And I'd imagine the people there are incredibly traumatized. And that's what's leading to the humanitarian crisis. And that's the reason I believe Israel is doing this. If Hamas killed a couple of people and they shot them, this wouldn't happen. It's 1,300 people killed in the way that they were killed is what's calling Hamas or Israel to say this is our 9/11. And that's what's leading to the geopolitical instability that we're seeing right now. I get paid to wait. Scary times we live in. Yeah, very scary times. Okay, so let's move on to some of this news with Palantir as well. So we got a report today for the UK government basically being criticized for how they recruited Palantir in the Homes for Ukraine process that they did. So for those that don't remember, when Ukraine had the refugee crisis back in February of 2022, unlike some of the countries that are not opening up their borders, the United Kingdom actually did open up their borders, right? Because we wanted to be an ally of Ukraine. And so as a result of that, when you open up your borders, you have to have a database of all the people that are coming into your country, right? You have to keep track of them. And Palantir was tasked in the UK to become the vendor of keeping track of all this data. The UK's chief commercial officer is warning a government contract with Palantir was awarded against public procurement principles after the US spy tech biz got a toehold in the Homes for Ukraine scheme via a 6-month trial period. So the article says Palantir's approach to the refugee housing scheme closely echoes its tactics in the UK health system. When it began working with the height of the pandemic for a nominal fee of €1, it was subsequently awarded a $73 million contract, and now it's up for getting a $584 million contract with the NHS. This contract is another example of how much the media does not want Palantir to get this deal in the UK. So remember, the reason why we got Homes for Ukraine, I remember reporting that on the day it came out, March 20th, I think it was like March 20th, 2022, something like that. The reason we got that deal is because Palantir was the only one that could do the job. Okay, Quantexa was not doing the job. You're talking about hundreds of thousands of refugees coming into the United Kingdom and needing to have a database to manage all of those people. The only way to have a database to manage all of those people is if you can move, incredibly quick. You can set up your systems efficiently, and you can get all that data sorted, in a meaningful way. So, for example, if you have like a vegan person from Ukraine, you can't match them in a house. That's what it was called, Homes for Ukraine, right? You're putting them in a different place. For someone who only eats meat, right? Palantir now green on the day, 1757, up 1.18%. So you have to have a lot of data, a lot of variables to make sure that the people you're matching in the homes in the United Kingdom, for those that are, happy enough to open up their homes to all these refugees, was accurate. I don't think any other company was able to get that off the ground. So this idea that the UK had to do a public procurement process, the refugees didn't have time to wait for a public procurement bureaucratic process, right? There was no time for that. So it's just absolutely insane, the idea that now Palantir is getting criticized, just like during the COVID vaccine crisis in the UK. You didn't have time to have a public procurement process to be able to create a vaccine distribution system when, people needed to get vaccinated immediately. So like at that point, what are you going to do? Are you going to have a bidding process for like 5 months? Like, no. So the idea that now Palantir is criticized because they colluded with the UK government to be able to get these deals. It's not collusion. It's just they were the ones that could solve the problem. So they ended up solving the problem. That's how I think of it. And that's why, we're seeing Palantir being the running to get this NHS contract. Palantir now 1740, up 0.2% on the day, getting a little bit of a premium down from 16 or up from 1690 that it was in the pre-market. Imagine getting a 6-month trial to prevent sleeper cells like you would in McAfee antivirus. Yeah, exactly. It's just pretty insane to imagine that was, that's their core argument. What if Palantir's ad in the newspaper was a subtle corporate announcement? I was thinking of that they're them paying, because it's a lot of money to pay for that ad just to say you stand with Israel. But if you're getting a crap ton of money from Israel, then it might make sense for you to pay for that ad and like really double down on your support. So there is an argument for that. Maybe they got a contract already, or there's a contract in the works, which is why they're, putting this advertisement out there to secure the contract. Or they want to get a contract and they're making it very known to Israeli officials, hey, we're not advertising in the New York Times for no reason. So that might be a little bit of the reason there. Fubo, let's take a look at that. Fubo, $2.6 up 2.77%. S&P 500 at 433, Palantir at 1740. The rest of the stocks are red. We're getting a little bit of green in the fintech sector. Square is green, Truist is green, Bank of America green, Wells Fargo, JP Morgan green. So we're seeing a red to green reversal there. And we're seeing some green in ARK and Rivian. Rivian is up a little bit, but generally more stocks are red. Obviously, all the semis are pretty red today. NVIDIA now down 6.5%. Goodness gracious. Bad day for NVIDIA shareholders. 430. That's insane. To go from 460 to 430 in one day is tough for NVIDIA. Again, the stock was at 412 just a couple of days ago, like last week. So that's pretty rough for NVIDIA. NASDAQ at 13,396, down 170 points, and Palantir at 1738. Let's get an update on Lockheed Martin, another defense contractor. They had earnings today as well. I want to take a look at their earnings report and why their stock is down. They were up 9% last week, which is not easy to do for a big company like defense, for Lockheed Martin, which is obviously much bigger. But they beat on the top and bottom lines. So let's get an update on them. They may give us a little bit of an indication on where demand is going for Palantir. What happened to NVIDIA? Smitty, you asked in the chat. The U.S. banned the sale of H100s to China. So that's decreased growth for NVIDIA as a result.
Defense and aerospace giant Lockheed Martin just reporting results. I want to get straight over to Morgan Brennan, who joins us with those numbers.
Andrew, good morning. A beat for Lockheed Martin, earnings of $6.73 per share on revenue of $16.88 billion. Those are both better than expected. Free cash flow, $2.5 billion. Sales up 2%, but the biggest weapons maker reaffirming full year guidance. CFO Jay Malavi noting tough comps for the fourth quarter. Lockheed's backlog just below Q2's record high, $156 billion now. And Malavi telling me the, quote, significant driver is again missiles and fire control amid demand for HIMARS and GMLRS, PAC-3s, Javelins, as the U.S. sends supplies to Ukraine and replenishes its own stockpiles. A big order for Sikorsky CH-53K helicopters as well. But meeting demand has been the challenge across the industry post-pandemic. COO Frank St. John telling me he's seeing some, quote, overall improvement in the supply chain, but still some issues around things like solid rocket motors, which actually power missiles. Regarding the Israel-Hamas war, St. John saying they're, quote, really hoping for a rapid restoration of security in the region with minimal loss of life. Lockheed is already ramping production across weapon systems due to Ukraine. St. John noting they, quote, don't see any issues associated with this new development impacting our ability to support the U.S. government and its allies in what's required. Defense stocks have rallied since the conflict began. Lockheed shares up 10%. They've given up some of those gains over the past week plus. Analysts have argued it's unlikely to affect sales materially at this stage for the defense contractors. Malave noting with capacity already growing, he, quote, wouldn't expect really any change to Lockheed's projections for the next few years. Now, on F-35, this is a quarter of company revenue, so it's watched closely. Deliveries of the tech-refreshed fighter jets, TR-3, recently pushed to next year. Executives telling me they're expecting between April and June. Complicating the entire defense picture, though, is the U.S. government operating on continuing resolution. That expires November 17th. You've got no elected Speaker of the House yet. For a prime contractor like Lockheed, if it's all resolved relatively soon, it's not a big deal. It's a company that can self-fund. But assuming...
Now, one of the things that's interesting about Lockheed Martin, again, is there are some congressmen that have started buying defense stocks. I forgot the name of the guy, but he bought a ton of Raytheon and another stock. And so you would argue that once the Speaker of the House situation gets resolved and Republicans and Democrats can work together, that we're going to pass a major funding bill for Israel. And Lockheed Martin is going to be a beneficiary of that. Remember, there's not that many defense contractors that can make all the guns and military artillery that we need. We're sending tons of aid to Ukraine and Israel. Someone's got to make that stuff. And it's likely going to be Lockheed Martin, Raytheon, the big boys. So even though they're down, I think they're reaffirming their year-over-year guidance for sales because they know that this Israel-Hamas war is definitely going to result in a long period of demand for weaponry. And again, that's not them estimating that. That's the Israel defense minister yesterday saying, look, this is going to happen. It's going to be a long war. We're going to have to spend a lot of money. And so likely we're going to see some upside on Lockheed Martin as the quarters improve. Last thing I want to see right here is the expectations on retail. So retail sales are up 0.7% month over month for those that are just joining, showing that the consumer is strong. I want to get a little bit of analysis for what the market thinks about why retail sales are up and what this means for inflation.
So I've been monitoring these numbers, trying to make sense of it. Help us, Dave.
Shaking my head here, Andrew. This is a wow. I want to give you a little context here. It was the strong consumer spending numbers from June reported on July 18th. And if you look back at the 10-year going back to that, that was the beginning of this surge in bond yields, this reassessment of third quarter growth that all of a sudden we were going to pop here in a big way. And we did. And it has been maintained. For context here, the consumer didn't have to do anything in the month of September to still have that 3 or 4% growth rate. Now that number is even higher, the way it worked, June came up and it was a good number. July just had to be steady, August steady. Instead, it keeps going up. They revised up the prior. This is the consumer that just won't quit for reasons people are just not capable of understanding. And it was not gasoline station sales, which we expected some strength there. Instead, it was just, what was it? Just 0.6, I think I saw. It was 0.9 on gas stations. People expected more than that. But across the board here, I'm looking at relative strength. Motor vehicles and parts up 1%. That was expected. Even that maybe be a little bit light, guys. Retail sales, non-store retail, the internet sales were strong. So we don't have a consumer that's going to quit here. And I just have to wonder how much of a problem that is for the Federal Reserve.
And that's why we're seeing these rates. As you can see, 10-year 4.8%. That consumer that's not quitting is not going to get that 10-year to come down.
While I do that, I'm going to look at what happened to the probabilities of rate hikes. They are a bit stronger for December. And by the way, the new development here is people are starting to take a small gamble that if the Fed doesn't hike in December, it may hike in January. Again, these numbers remain below 50%. But what I'm noticing now is the probability of a hike is now higher in January than it is in December, and it's almost nothing for November. So what's going to happen today, guys, is I suspect that these GDP tracking forecasts that we follow are—
Yeah, I mean, if we escape November and we're clean, we might have to start worrying about December and January. I just wish that in November the Fed would come out and they're like, all right, we're done raising rates. We're done with the cycle. The tightening is done. The problem is they're not going to do that. Because if they do that, the market's going to go euphoric and be super excited. And like the market's just not going to let them do that. So, I mean, the Fed's not going to let the market do that. So we're in a tough situation still with rate hikes. I don't know why the consumer is as strong as they are. Again, we talked about this a couple of weeks ago when I spoke to one of the people near me that's like doing a lot of real estate, saying that he's putting up houses at Zillow for prices that are insane and people are buying. Like, where is the consumer getting this money from? Philip says consumers can't buy homes, so they have more money to consume other things. That's actually interesting, right? If you're not buying a home because you're waiting out on interest rates, then you have money to buy other things. That could be an argument. But remember, this argument about student loans, like, wasn't the prevailing narrative last month or in the summer that student loans are coming back is going to gut the consumer? I don't know, man. I mean, like, maybe in November we'll see that happen, but it seems like consumers are still spending even if they have to put in $300-400 a month into their student loans. So I don't really see where necessarily that downside is coming from as well. But we'll see. I mean, we got a couple more months to go. So far, the consumer has been very resilient and it's been really good for the markets. One other quick headline I just wanted to run through and then we'll be done for the day is LinkedIn has cut 668 jobs. 668 jobs, bringing the total to 1,400 this year. It's very interesting why these job cuts are coming. LinkedIn is one of the only social networks that's actually available in China. And they said at the same time, they're phasing out their app in China. They're one of the only apps that China allowed because China, they don't want US apps, but LinkedIn's very business oriented. So China was like, all right, this could be good for our economy. And today they say they're leaving China. LinkedIn is a part of Microsoft. So this impacts Microsoft. They bought it for $16 billion back in 2016. Or I think they bought for $22 billion, something like that. In total, there have been 242,000 people laid off in the tech sector in 2023. It's not a lot of layoffs, but it is interesting. A lot of them are around R&D, engineering, product talent, and finance. Another tech company laying off some people. So, I mean, it's not going to make a dent in the unemployment rate that the Fed wants to see, but we are seeing some layoffs at these higher tech companies. Oh, Microsoft bought them for $26 billion. LinkedIn became significantly less transparent in terms of its finances and other operational metrics after the acquisition. In July 2023, the company noted it had more than 950 million users and over 15 billion in revenue. I know a lot of people don't use LinkedIn, even though it is very big. If you're in high school or college, you basically have to create a profile. So the idea that they're cutting, I'm wondering why they're having to cut if they're growing to the point where they're doing 15 billion a year in revenue and 950 million members. It must be something internally with the business not performing as well as it needs to perform. So they're owned by Microsoft. Yes, Microsoft bought them a while ago. Garcia, I'm thrilled to announce I've been fired. Bro, the posts on LinkedIn are very cringe. I'm not going to lie. They are very, very cringe. So, yeah, that's probably how people are going to be talking about it on LinkedIn. All right, let's do the word of the day, and then we are done for today. It was a very dicey day in the markets, but we are seeing a little bit more of green. Palantir at 1754, not too bad. S&P 500 still a little bit red, down 0.81% at 432. Robinhood's green. CleanSpark, all the Bitcoin companies are green. All the semiconductor stocks like NVIDIA are down pretty badly. But outside of that sector, the market's relatively okay. Okay, here we go. Word of the day. What do we have? Let's click on it right here. Bloviate.
Bloviate.
Okay, bloviate is our word of the day. So, to speak pompously. During the political debate, the candidate continued to bloviate about his accomplishments. The professor's lectures were often filled with bloviating, making it difficult for the students to stay engaged. So I guess it's when you're just saying stuff to say stuff. I'm not gonna lie. Sometimes I bloviate. Sometimes I end up bloviating. But yeah, I guess it's saying stuff just to say stuff. So that's the word of the day. Let's do another word of the day. That one's good, but what's the Merriam-Webster one? Mollycoddle. Okay, this one's better. When you mollycoddle someone, you are treating that person with an excessive or absurd degree of indulgence or intention.
Mollycoddle.
I like this one. Mollycoddle. So basically, I mollycoddle Palantir every day. Amit bloviates about equity markets every morning. Yes, and at the same time, I mollycoddle Palantir every morning. Mollycoddle. That's a good one. I'm gonna use that somehow today. Make sure you use it somehow and let me know how you use it. Mollycoddle. To give something a lot of attention. Let's see how you use it today. Callie, I need to stop mollycoddling you. It's because of my bloviating skills. That's why you keep mollycoddling me. Amit, you're so close to 25K. Yeah, I think we're like 200 subs away. So if you haven't subbed, please sub to the channel. If you come to the stream every day, please subscribe. Please like the stream. Hopefully we hit 25K soon. And yeah, we'll keep it going from there. All right, everybody. Thank you for joining. I appreciate it. We'll have another Palantir Daily video uploaded today, hopefully a little earlier than it was yesterday. And we'll see you on Finance Junkies later tonight to talk about all these earnings we got today. Have a great Tuesday, and I will see you guys a little bit later. Thank you, everyone. Have a good one.